Hey guys, welcome to Nestology. We are your hosts. I'm Jessica.
I'm Shelly.
And today we have a super fun topic. We're going to talk about... Oh, Shelly, get your Starbucks. Okay, we're talking about interest rates and the housing market.
Oh, I feel like the Grim Reaper already. Do
Drink
we
up.
have to?
Yes, we do.
All
Get
right,
your caffeine.
Yeah, thank you for my Starbucks refresher. It's much needed right now.
So, I know this is... Oh, Shelly's rattling her ice.
Yeah, sorry.
So, we know that this is frustrating for home buyers and home sellers right now with the housing market the way that it is. I mean, you've got inflation, home prices, and interest rates all kind of going against you right now. And so, I mean, well, the big question that we get all the time is, are rates coming down? Okay, Shelly, are rates coming down?
I know. This topic has not been fun. I'm going to get out my magic 8-ball for those of you that are old enough to remember that. I think
People know what that is, right?
I think the answer is now no, actually.
Yeah.
Earlier in the year, we heard that it was going to be some great news on the horizon, and now we're looking like, no, we're pretty much going to hover where we are, possibly for the rest of this year.
Yeah.
So we kind of have to get used to it, and we have to have options on how to buy a house. People still have to buy houses.
Yeah.
People still have to move.
Well, and so many people have been waiting. I mean, over the last 2 years, we keep hearing, we're just going to wait. It's going to happen any day now. But it's not.
It's not. So just, you know what, get over it, move on.
Okay, so
Don't
how do
cuss
we...
out your lenders, by the way, because it's not our fault.
Well, Shelly, we know you decide the rates.
Oh, absolutely. If I could, yeah, that'd be great.
Well, when I do get your emails sometimes with the updates each week, I'm like, Shelly, what are you doing to me?
Oh, I get so many comments on that. They're like, no, these suck. Can you change them? I was like, I wish I could.
Okay, well, can you change them?
Well, actually, you know what? There is a way we can
That leads us
change
right
them.
in.
Yes, it does. It's called a rate buy down.
Okay, so what does that mean? Talk to me like I'm 5.
Okay, 5-year-old. Okay, so basically, you can take current market rates, and let's just say they're, hovering right around 7.25 right now on average. You can actually pay money to buy the interest down lower. You have options to buy it down, well, as much as you want to see, I guess it depends on the amount you want to pay. But let's say you could buy it down 1%. And so now you're looking at like a 6 or a 6.25. You can actually buy it down 2%. So,
Oh, really?
Yeah. So 5.25. Isn't that sounding better?
Yes.
Yeah. There's
I
a
didn't
cost.
realize, I mean, we've done with some of our buyers like 0.5 to 1%, but I didn't realize you could go as far as 2%.
You absolutely can.
That's amazing.
I know. So you do have options with that. So if you're out looking at houses, make sure you talk to your clients or talk to your lenders about that. I do talk to all of my clients about that and give them all the options with regards to interest rates, because sometimes, I mean, yes, there's a cost associated with it, but sellers can pay for them.
Yeah.
Right?
Right now, we're seeing a lot of that. A lot of the houses that are selling, we're seeing, instead of them coming down and negotiating on the sales price, which, I mean, they're still doing some of that. Very often, I'm seeing a lot of these closing that have $5,000 to $10,000 in closing costs paid by the seller. And so we don't know exactly how the buyer is using that, but from my perspective, I see a lot of people using it for a rate buy down. So I know there's a lot of factors, I know, so we don't want to get too deep into it, but if someone had $10,000, about how much could they buy down the rate?
It might be a full percentage.
So,
or more.
Yeah.
It does really depend on the market. So just so you guys know, it's not like a 1-for-1, and it's not, it can change daily as far as the cost to buy down the interest rate. Again, I'm trying to keep 5-year-old level here, but you do have a lot of options with regards to the $10,000. I've seen a lot of my buyers that have it, and we use half of it for closing costs and maybe use $5,000 to buy the rate down. And I think you were doing some math yesterday or something for a client, weren't you? Like with regards to how much they would save monthly. Was it like $250 a month to buy it down?
Yeah, it was. So I ran it on a listing that I have. The price is $475, and so I was actually teaching the buyer's agent. She's newer. I was trying to show her the numbers because it made so much more sense. Instead of offering $10,000 lower on the price to get $10,000 to buy down the rate, it was $250 a month
savings.
Yep.
In payment.
Yep.
Okay,
the monthly
huge.
payment was $250 less. And I mean, what would that be if they took $10,000 off the price on a $475 home? I mean, that would be what?
Oh my gosh.
40, $50?
Yeah, not as much, because you're looking at a 30-year term,
Yeah.
right? So it doesn't have as big of an impact. You're going to have a bigger impact spending money on buying the rate down than you would putting that money towards a down payment. $5,000 or $10,000 towards a 30-year note, I mean, that's like, nothing. It's really nothing over the life of the loan.
Well, and then some of our clients that are selling a house and have a lot of equity, they were looking at putting 30, 40% down on a house. So they've done that instead, where they've only put 20.
Hold on. Let's talk
What?
like a 5-year-old. Equity. What is this big word, equity, you speak of?
Okay, what's equity?
What is equity? Equity is the difference in your mortgage if you own your home and what the house is valued at.
Yep.
That is your equity.
It's the amount that you actually own of the house.
Yes.
So, and some of our clients who have been in their house for 10 years, they got in at a great price and now they're getting to sell it. So they have a lot of that equity.
They
Big
do.
word.
I know. I was actually reading something yesterday that was talking about the amount of equity in most people's homes. And actually, it was saying that most people have greater than 50% equity.
Yeah, it's
right now because of the increase in value.
I think it's more than 50% of people have more than 50% equity is what I read.
Yes.
Yep.
We read the same thing.
Yes. So, well now, is this rate buy down, is this a new thing?
No, actually it's not. You know what? It is very much market driven. So several years ago when we were in, sorry to say, 2 and 3% range in 2020 and 2021, nobody talked about buying the rate down because why did you? It was practically free money. So nobody wanted to do that.
Right.
So it's always been there. It's just in this market with rates being a little higher right now, it's become more in vogue.
We're seeing the same thing with assumption loans. That's,
Ooh, yeah.
I mean, most of us agents don't even know I've learned how to do them now because
I know. Well,
it's become a
talk
thing.
about that because that's not something I do on my end, right? That goes to the mortgage servicer. So explain, what is an assumption? What can you do with that?
So this is where the buyer takes over the mortgage for the house. So it's kind of a small percentage of homes that have this as really a viable option. It's only FHA and VA loans. Now, sometimes conventional loans, but you would have to call your servicer, whoever has your loan, and you can
Or
ask
it's in
it.
your note, whether
Yes.
it's assumable or not.
Most people don't keep track of their paperwork, so
Oh, what? That's an official document. Oh, my gosh.
easier to call the mortgage company. But if you bought the house over the last few years, you could have that 2 to 3% interest rate. The buyer can take over the loan. Now it goes into their name, so it's not that you're financing the home for them as the seller. They're taking over the loan, but they get that lower payment. So I have a few of my buyers set up on searches specifically for properties that have an assumption loan.
Oh, my gosh. Okay, now that's amazing because then you're going to take over, basically you would take over a 3% interest rate on a house.
The downside is that you have to make up the difference. So that's where a house that, if the owners have been there for 10, 15 years, if the house is worth, say, $500,000 and the mortgage only has $100 left, you have to make up that difference with cash. So this really works best if they've only been in the house for a couple of years.
Gotcha.
So that's why I was saying it's a small number of them, but it's amazing when you can do it. I had one property where the mortgage payment that they took over was $1,000 less than what it would have been if they bought it with today's rates.
That is amazing.
So you just have to know where to look for them.
Yeah, needle in a haystack. Well, Jessica, what are sellers doing in this market?
Well,
what are you seeing on your side, right? I see the rates and all that kind of fun stuff, but when you've got listings, how is that working for sellers right now?
well, the market is moving a little slower, so houses aren't flying off the market the first day that they're listed. We don't have bidding wars on most houses anymore, at least here in DFW. I know that state to state it is a little different, but here in Dallas-Fort Worth, it's staying on the market a little longer. Buyers have more options right now, and they're getting a little pickier because they're spending so much money. So the thing that I suggest on my sellers is you got to put your best foot forward. You have to go...
Like with the first offer, you mean?
Well, with how you prepare the house to go on the market.
Oh, sorry.
No, yeah, good. The staging of the home, good photographs. So funny. I was talking to my photographer the other day when we were shooting a new listing, and he said that they're getting multiple new clients a week, new agents that are coming to them that they've never worked with before.
Because it's so important now.
Yes. And he was like, I mean, part of it's they're amazing. And so referral business, I have agents ask me all the time who I use.
Yeah, because your photos are fabulous.
They do such a great job. So their business is growing because they're awesome. But I'm betting that's a huge part of it because so many agents were doing cell phone pictures before. And they are not great when you take a cell phone picture.
The lighting's not exactly the same.
It's not. So I think that's a huge part. Agents and sellers are seeing that you have to market it well, and you have to put your best foot forward when you go on the market. Otherwise, you could be sitting on the market for quite a long time. People won't see your house if it doesn't present well online. So staging, professional pictures, quality listing with all the details, because I see so many listings that things are inaccurate and they're not filled out well. I think we're getting a little bit of lawnmower noise.
Wow, sorry for the lawnmowers outside.
Oh, well, that's fun.
Well,
I hope you guys enjoy.
So what else are you seeing? What else are you seeing?
Well, actually, I'm going to go back to buyers for a second.
Okay.
So I know you're not going to love this one, Shelley.
Oh, here we go. Do I need to take a sip of my drink?
Do you need alcohol instead? Okay, so
Maybe.
builders. Builders are a great way, a great option to explore. They have a lot of great offerings right now. So
Talking about homes with builders.
homes with builders. So going to new construction. When you visit a new construction community where, it's the big production builders, a lot of them are offering amazing incentives right now. So if you're looking at what's on the market for existing homes and interest rates, it may not seem doable, but I have a lot of people going to new construction, unfortunately for Shelley. The reason Shelley's groaning here is because she's lost a lot of business to the builders, because how they do this is they're tied in with, they own their own mortgage company, and a lot of them own their own title companies. So they have this partnership, and you can get these incentives by using their lender. So then Shelley's lost some clients from that.
So it's not that they're better. That's not at all what it is, because I still have the relationship with the clients. But
some examples of what we're seeing, they may offer to pay your closing costs. That's a common one right now. They may be offering $5,000 to $10,000 in closing costs, plus buying down the interest rate. They're offering, or I guess not to buy it down, but they're offering a lower rate. And so, Shelley, how does that work? Like, how are they giving? I mean, I see some with 4.5%, 5.5%. So how are they getting that rate?
I just saw one at $499 that was offering $10,000 in closing cost. And so I was talking to the client about that. So the way they do that, it's not just that they have fantastic rates, but what they're doing is the builders are buying up what's called a commitment. It's a block of loans. So it might be, it's a certain dollar amount. It could be $2 million worth of loans at 4.99%. Now, once that commitment is full, they can't offer it anymore. So it's a limited time. And so you'll see that a lot. Like, okay, this is a limited time, and sometimes they're right at the end, and they may or may not be able to, give the client that. But they're buying up small little blocks. I actually can do something real similar to that. So I always like to take a look at it and talk to the client, because I'm always going to be a resource no matter what. We've had some mutual clients that, you can tell,
Shelley's been great. There's been a few where she did the pre-approval for a buyer, and then we ended up at a builder, so they switched because, Shelley looked at the numbers to make sure it made sense, and she would tell them,
absolutely,
that's the better option, go there. But there was one that, we were under contract, building was almost done, and the builder's lender kept saying, well, no, we can't do this because your job offer letter isn't enough. You have to live in the state already. And he's like, but I have the offer letter and I'm buying a house in Texas. And they said, no, you have to have a Texas address. He's like, but how do I get a Texas address without getting the loan?
So they called me.
Yeah. So the buyers, I was like, call Shelley, see what Shelley says. So thank you for that.
Well, you're welcome. Because I said, no, that's not the case. Go back and tell the lender this. And then it was fine.
Yeah. So she helped give them advice on what to do so that they could get to closing with a lender who was making unreasonable requests that didn't make sense.
I'm happy to help.
So, some of the others that we're seeing, because not all the builders are doing that, where they've bought these rates, which that makes sense now too, because some of them, when we go in to look at these houses, they're like, well, we only have a few left.
Yes.
And so
that's
that
why.
makes sense. And then they'll say, well, now we're not offering the 5, now it's 5.5, because
Right.
that's the next offering they have.
Exactly.
So some of them, though, they may not have the exact same deal where they've like pre-purchased these rates, but I mean, some of them are offering $30,000-$40,000 towards closing costs, where you can use a portion of that to buy down the rate. So it's still the same. You're kind of getting the same effect. They're just giving you the money so you can buy down your own rate.
Yeah, I have seen some that offered a crazy, like $40,000. I mean, closing costs, y'all, are not that much. So you have to use it for other things,
Right.
like buying the interest rate down.
Yeah, because if your closing costs are only $20,000, you don't want to lose that money.
No, got to be creative.
Yes. But I think a lot of the incentives that they're doing, it's towards upgrades in the house, or for things like this with closing costs. They're trying to protect the value of the home. They don't want to negotiate on the price. So don't expect to go to the builders and negotiate the price down, but getting all these incentives can be really helpful.
Well,
So-
it is. And, I think it's really going to be whenever rates do drop in the future, you're not going to see as many of these,
Right.
right? Because when we're in an environment where rates are potentially going down, they're not going to be buying these big coupons, because they're going to lose if that rate is going to be higher than the current market rate,
Yeah.
because
We-
they've paid for that block of loans.
Yeah. And I've already seen it, some changes with it, because, well, at the end of last year, rates were over 8% for a little bit. Mm-hmm. And so in January, when they got down closer to 7, there were some builders I called. They're like, we sold out of everything this weekend. So after you go through something like that, then they're going to start to back off on incentives. So
Yeah.
yeah, if you wait for rates to drop, I mean, if it does get to, 6% next spring, you're going to have more competition again. So you won't be able to get the seller to help you pay for a rate buy down or pay your closing costs.
Right. Well, what about home prices?
Home prices have come back up. So after, oh gosh, rates, what did they start? They started going up summer of 22.
Summer of, yes.
It's been about 2 years now.
right after July 4th.
Yeah. So it was that winter of 22 going into early 23. Home prices fell, but they've come back up. They're back to where they were before we hit that peak. So we're not quite to the same level we were summer of 22, the very peak of the market, but we're getting close to it. They're coming back up, and I mean, they're staying steady. We're not seeing any signs that the home prices are going to be falling. So, and all the projections say that it's going to be small increases. We're not going to get that 20% increase like we did a few years ago, but 2 to 3% increase year over year is what's expected for the next 5 years.
Got it. But if rates drop,
We could, yeah.
then what
Cause
happens?
that to pick it up quicker. Well, and like I said, I think part of it, because what we're seeing is not people negotiating hard on the price, they're getting closing costs.
Yes,
So
absolutely.
that's what's keeping the home prices staying steady. They'd rather have the closing cost money, buy down that interest rate. So it's those extra things. You won't have the time. I have buyers right now who see a house and wait 2 weeks to write an offer on it because they have the time to do it. It's not as rushed, which I love. I hate when people
a
are
little
pressured.
different when it was the crazy multiple offer situations. But don't you think, like, whenever rates do drop, we're going to start seeing a little bit more of that again, right?
think
and it's
so.
going to drive prices back up.
It's going to drive prices up. Things will move quicker, and you won't have as much, power as a buyer to ask for repairs or things like that. So
So it's still a great time to buy now.
It is.
Regardless of where rates are. Just buy your interest rate down, get a lower price on your home, because
Mm-hmm.
once rates drop at some point, prices are going to go back up because
Yep.
there's going to be more competition.
Well, and I saw it in 2021, and I see it with some of my clients. I have a client moving to Maine. I have one moving to Connecticut. The markets in some of those areas are still like that, where it's bidding wars. They are having to waive inspections. They're having to offer tens of thousands of dollars over appraised value. So the markets in some areas, and that's what we saw here in 21. I don't think we're going to get back to that intense, but people had to make such rash decisions. There was a lot of buyer remorse. There was a lot of risky
You had some
offers.
clients that didn't even see the house. They bought the house and hadn't seen it,
Yeah.
right?
Yeah. We had that one. Yeah, they didn't see the house till a month after closing
Oh my gosh.
because they ended up having a baby. Their baby, I think, arrived early, and they closed on the house remotely. Never saw it till a month after closing.
That's crazy. And they love the house now.
They do. They do. It's an amazing house, and they're so happy with their move. But yeah, the things that people had to do, like I said, I love it right now for buyers because they get to go home and sleep on it. They get to run numbers. They get to do pro-con list about all the houses that they saw and really make sure that they made the right decision. I hate when a buyer has to make an offer the same day a house goes on the market. It's a huge decision.
It absolutely is. And you have options with regards to rates. Mm-hmm. Lots of options.
You have lots
so
of
it's
options.
not horrible. It's not
not.
horrible. I just changed my mind on the whole thing. Historically speaking, rates are not super high, y'all. Because if you remember, I'm very seasoned.
Old. She's old.
I'm old. I'm a lot older than you are. But the point being, I've seen a lot. And back when I started in the business, rates were 8, 9, and 10%. Right? And that was, do I dare say the year?
Do you want to say
Probably not. Well, maybe. Okay, maybe I will. Season's not horrible. It's not horrible. But 1991, rates were 8, 9, and 10%. So, I mean, y'all really.
I would much rather buy a house today than, some of the other markets that we've seen. So I think this is a better market for all when it's a little bit slower like this.
It's a little more balanced.
It is.
We all like balance. We all
Yes.
need balance in our lives.
Yes. Well, and I'm glad that I don't have to rush out and go show a house the second it hits the market and write an offer 5 minutes later because...
Oh, my gosh. You were answering calls in the shower. I remember.
Yes.
Well,
if we missed it, oh gosh, yeah, there were so many nights we stayed up so late because they said we'll make a decision tonight. So we wait and wait and wait. And then I'm like, well, we haven't heard anything. Of course, the second I hop in the shower, then the agent calls, but I know that if I don't answer it, they're just going to go on to the second offer because they've got 80 others.
Right. I know.
So they would just move
Balance is good.
on.
You can
So
shower peacefully now.
I can. Yes. Or take a day off work. So,
What?
yes.
That
Grateful
happens.
for a day off work.
Yes, I understand. I understand.
Oh, well, guys, be sure to check us out on our socials. I'll link those in the show notes, but you can find us on Facebook and Instagram. It's Nestology Podcast. Or you can email us if you have any questions that you want answered or stories you want to share. Our email is nestologypodcast@gmail.com.
Well, thank you for joining us on Nestology, where we hope you make the best of your nest.
Bye, guys.
Bye.